All right. Hello, everybody. This is Mike Rixey again with NetPicks. I am the lead options instructor. And this is our weekly recap for Friday, October 2. Wanted to jump on real quick. We have an extremely busy market here, no doubt about it. So it's not going to be a super long session today, but I did want to recap some of our trading from this week. Also give you guys some thoughts on how we're handling just this wild and crazy movement that we've seen here of late. If you have any questions throughout the session today, feel free, as always, to post a comment. You can always, if you're watching the recording, you can always post a comment and I'll get back with you right away. So let's talk about markets here. Let's go back to the beginning of the week. If we go back to our weekly recap on Friday last week, we had talked about how we are entering into this upper end of the range here. The moving average is up top on this daily chart of SPY. The S&P 500 was testing this upper end, and we tried to break it a couple of times this week. Wednesday and Thursday, you can see if I zoom in a little bit, make it easier to see. We tried to break up through those levels twice, and we stalled out each time. Yesterday, we did actually close above all of the moving averages, which was good to see. The problem with that, it wasn't necessarily a problem with price action. The problem was with the news overnight. Right? We had news overnight break that the president has COVID and markets immediately sold off. Right? So it was a pretty weak open, all news driven. And that's been the big challenge the last week or so. This has been a completely news driven market, whether it be news from the president. We've had all of these rumors of another stimulus plan. There's going to be one, then there's not. Now there's going to be one. You don't know what's going to hit next, right? It becomes a challenge. And I bring that up because as technical traders, which we are, we like to focus on price action as much as possible. And we like to focus on the price patterns on the charts. In an environment like we have seen the last week and a half or so, the markets have shifted their focus away from the technicals and they're trading solely based off of the hope of another stimulus plan and a reaction to news that the president is sick. Now, the problem with that approach is you don't know when the headlines are going to hit. It could be 5 minutes from now. It could be 5 days from now. When the markets react this quickly to those headlines, it becomes challenging for technical traders. What I am doing in this type of environment is I'm starting to make some adjustments on how I'm trading. The first thing that I'm doing, I'm starting to cut my size. For most of this week, I have been taking positions with between 50 and 75% of my normal position size. That's a personal decision that I have made because of the market being so active, and it's all been because of the headlines. I've also been using primarily vertical spreads this week. I've been using a lot of credit spreads. I've had some questions from people on that. I've had a lot of questions the last few days from people asking, do all we use credit spreads? Is that the only strategy that we use? It's not. It just, given the overall market environment, we've had big movements intraday. We just haven't had a lot of follow through, right? We haven't had follow through into day 2, 3, 4, 5. It's been a lot of back and forth noise. The credit spreads will get you through those stretches much better. They're more forgiving type trades. They're more forgiving because the time decay is helping us. The volatility movement is potentially helping us. And we don't need those big directional moves like you need if you're just going to buy an individual call and put. I'm all for diversification. And I think having a mix of trade types is crucial. But I do want to make sure that you have some credit spreads going right now. I think it's a very, very important approach given what we're seeing market-wide. From a technical perspective on SPY, going into next week, we are well off of the lows of the session today. The low of the session on SPY was down at 331.19. We're over $4 off of the low here as we go into the last hour and a half of the session. It's hard to expect anything other than a rally into the close today and then early next week. This market is trading solely off of the hope of another stimulus plan, and you have to expect an announcement sometime over the weekend. I'd be very, very surprised if the market, if we got to next week and we didn't get any news of another stimulus plan. I'd be very surprised. And markets are really just trading off of hope that that's going to happen. We are also heading into earnings season. As we get further into October, we have a lot of the individual names on our list releasing earnings. If we go over to the watch list on the left-hand side, inside of the Thinkorswim platform, they post these red and blue icons here. If I click on those icons, you will see the earnings date that is upcoming for all of the individual stocks on our list. Bank of America, earnings out on October 14th. Citigroup, earnings out on the 13th. As you get deeper into October, the financials kick it off. Then we head into the tech sector, and every individual stock will have their quarterly earnings. And normally, when you're going into an earnings season like that, you typically see markets favor the upside. That's just something that we have seen previously. So I would expect going into next week, we are at a crucial point here because we are sitting right on top of those moving averages yet again. The 50-period moving average as well as the 20-period moving average. That's the green and the brown lines there on my chart. If we can break those levels on the upside, I would look for another leg higher next week. If we get the stimulus news to come out over the weekend, you would expect the market to rally up on the news, but whether it has staying power or not, that is going to be the big question. Could it be one of those buy the rumor, sell the news types of events? We've seen it so many times in the past. Obviously, we have no crystal ball. So just going off of technicals, the fact that this market, outside of the NASDAQ getting hit today, this overall market has actually hung in there really well. Given the news that came out last night, you would have expected just a bloodbath today market wide. And we just haven't had that. We have some names getting beat up a little bit, but for the most part, this market has hung in there really well. So this area right here around 335.50, that is the key area that I'm watching this afternoon. Should we break that level, I'm looking for a move up towards that previous swing high, right around 342 to 342.50 would be an area on the upside that I would watch for an area of resistance. On the flip side, let's say we do get some selling into the close, and maybe people don't want to hold into the weekend with all the unknowns. How sick is the president going to get? How many other people in the government are going to get sick? There's a lot of unknowns there, right? If we get some selling, I would be watching 333.50 as an area of support. That's the 8-period exponential moving average. And then I would also be looking at 332 to 332.50. Those are areas that I'd watch here this afternoon for some support areas. If, let's just say we do get further news to hit, we don't get a stimulus plan. If we do get further selling into early next week, remember, we've got the 89 EMA down here, right around 324 to 325, that zone right there. That level has held now for the last couple of weeks. Look for that to be a pretty strong area of support if it's tested. The volume this week has been pretty darn good. All things considered, we have had very good volume. In fact, the last 3 days, we have been approaching 100 million shares on SPY. It's very good volume. That's a good sign. Makes it much, much easier to get fills quickly and at good prices. The ATR, which is the average true range, this is indicator down at the bottom, still remains pretty elevated on SPY. You can see the average true range sitting right around $6. That's just indicating pretty good range to work with on a daily basis. There is a very active environment that we're in right now. I would expect that to stay pretty active. I'd expect it to stay elevated between 5 and 6 or even above, especially over the next few weeks, now that we have a lot of unknowns with the election. How does Trump getting sick? How does that impact things? I do expect this market to stay very, very active. The VIX up above 27. It briefly got up to just under 30 earlier in the session. The volatility remains elevated, and it should stay elevated going into the election. I would expect it to be an active environment. That's why we want to continue to use a mix of strategies. And another thing, I should have pointed this out, another thing that I've been doing personally is looking for smaller profits. As much as I'd love to go for those bigger winners, right now I'm taking profits as quickly as I can. I'm just trying to take those profits before the reversals happen, right? You go back to yesterday's session, the market looked poised to break out going into the end of the week. We had the jobs number this morning. So far, really going back to spring when COVID really picked up, the jobs number has led to a lot of strong rallies. You would have expected a rally again this morning. All it took was one surprise headline overnight, and it threw chaos into the market. Because of that, I know I keep coming back to that, but I'm just trying to walk you through some things that you want to keep in mind. Take the profits while you can, because things can change in a hurry. As we start to settle back in, if we start to get more of a trending type move to develop here in the weeks and months to come, sure, we can shift right back to going for those trending type, longer duration moves. But right now, I think going for the singles and doubles, I think it's better than going for the triples and home runs, right? That's just the approach that I'm taking personally. The internals here today, very, very mixed. You can see our volume ratio up top, slightly positive on the New York Stock Exchange, more volume on the upside than the downside. And then on the NASDAQ, slightly negative, which makes sense. I mean, the NASDAQ is definitely the weak name out of the group. The NASDAQ's gotten beat up today. The advanced decline line only at it's only at minus 400 on the NASDAQ. So if there's an advanced decline reading of minus 400, normally on a trending day to the downside, we'd want to see that advanced decline number at minus 1,000. So why is the NASDAQ so much lower today, given that the advanced decline line is actually not that bad? It's because the key tech names are lower. Apple down $3, Amazon down 85, Facebook down 5.5, Google down 28. Those key tech stocks have gotten beat up. That's all that matters, right? We've seen it on the upside. We're now seeing it on the downside. Those big names in the NASDAQ have such a big weight on that index that when those names are lower like they are today, you're going to see the NASDAQ weak. Now, if any of those names decide to rally off of the lows going into the close, we could definitely see a pretty powerful move this afternoon. So I'm watching that pretty closely over the next 90 minutes or so. We've had a few big programs today. We've had a couple of sell programs that went at the open minus 1,700. That was a pretty nasty sell program. But since then, we had one other sell program late morning. And then we actually had a couple of buy programs as well. So it has not been as nasty as you would think. That's why it's so important to come in and look at the internals. At first glance, you see the NASDAQ down 200. You see the S&P down 16. You would think, hey, it's been a really nasty day of selling. But when you dive in and take a closer look, it actually hasn't been as bad as what you would think. You take a look at the SPY chart, or this 5-minute chart in the lower right-hand corner. Yes, we are lower on the session. But for most of the day, you can see that we have been trying to grind our way higher. So that's why it's for me to come in and just strictly look at the bottom line index numbers. It's not enough. These internals help give me a better glimpse into the overall market environment. And what I'm seeing here today, I would not be surprised if we rally up into the close and then again early next week. This market has just been super strong. The wild cards there again are any news event that comes out of the Trump administration, or even with the stimulus plan. Those are going to be the wild cards that we just don't know going into next week. Let's talk about, I'm going to go over to the trade page here a second, because I want to talk about one of our overnight pop trades. These are trades that we have just started to implement with our students. It's just been a really great performer for us. It's what we're looking at here it's what we call our overnight pop trade, looking to take advantage of expiration. SPY is one of those products that does have options expiring every Monday, Wednesday, Friday. We have multiple times a week that we can take advantage of that expiration. What we did yesterday afternoon, we typically like to open these trades the day before expiration, and then hopefully within the first hour to 90 minutes of the session on expiration day, we like to close the trades out. We had two examples this week where we actually had to hold later in the day into early afternoon to actually close out of these positions. The reason we love using this setup, expiration day can be very, very active. Options are going to move very, very quickly. And if you don't get a big directional move, the credit spreads can really benefit from those options losing value immediately. I'm not going to say we will use credit spreads exclusively with this setup, but it's pretty darn close. I'm going to say 9 times out of 10, we're going to be utilizing the credit spreads with this strategy. The goal there is we know if the markets, they open quiet, or if you do get a directional move in your favor, you can see instant returns with the credit spread. So what we did yesterday afternoon, and actually, let me briefly bring up the chart here. I'm going to pull up the 195-minute chart. So yesterday afternoon, I mean, we had saw a market here the last few days that had rallied up. We got up above the moving averages on SPY. We actually triggered into a long setup here with our trend strength indicator. Our trend strength indicator had flipped from red to blue, going from bearish to bullish mode. So yesterday afternoon, we looked at this chart and said, okay, we're looking for either a neutral to bullish trade going into Friday. We were expecting a move higher. As a result, we came in and we looked at selling an out of the money put spread. We all know what's happened here today, right? We were absolutely dead wrong on direction. We were not expecting the headline to hit overnight, but it did. Markets saw a big gap to the downside, and our neutral to bullish trade was in trouble from the get-go this morning. What we did yesterday afternoon is we came in and we sold the 335, 333 put spread. All that means is I'm selling the 335 put and I'm buying the 333 put at the same time. We put this trade on yesterday and we got filled for 60 cents. We collected $60 per spread to put the trade on. It required around $140 of capital per spread to put the trade on. I mentioned to our students yesterday afternoon, I took this trade, but I took it with a roughly half of my normal position size. I just wanted to be more conservative, knowing that there was so much headline risk out, specifically with the stimulus news. I wasn't expecting the Trump news overnight, but I was concerned with the stimulus news. All right. So we collected 60 cents. This ideally is a neutral to bullish trade where we make money as long as the ETF stays above 335. At the open today, we opened down around the 331.70 level. So I had questions come in immediately. What do? Do we close the trade out? Do we take the loss? In this market, you can't overreact, right? The market wants to chop you to death because we've had so many big moves. What we did this morning is we said, okay, it's not looking good, but all it takes is another headline to hit and this thing can rally up. And when we look at the ATR here a moment ago, that average true range on SPY, it's up around $5 or $6. I needed here this morning, I needed around a $3.50 move to the upside. It didn't seem like it was doable, right? And that's a pretty big move. But looking at the ATR, I know that SPY has an average true range of between $5 and $6. Anything can happen. All it takes is one headline to hit. They're making progress on the stimulus plan, and this market's going to rally up pretty big. Well, we did rally off of the lows. In fact, we rallied about $6 off of the lows. And where I'm looking at here in the upper right-hand corner, the low of the session, 331.19. The high of the session, 337.01. Anyone surprised that there's a $6 range from high to low? It shouldn't come as a surprise because if we take a look at the ATR is between $5 and $6. Okay, this range is no surprise today. So what we did, I ended up closing this position out here just after lunch, and we closed it out for 50 cents. I bought it back for 50 cents. It gave us a $10 profit or a $20 profit following our risk parameter. So it was a tiny profit, enough to cover commissions. So why am I considering that a huge success? Because when you can be dead wrong on direction, we were expecting a bullish move going into today's session. We did not get that. We got the exact opposite. To be dead wrong and still be able to book a partial profit, that is why we love to use the credit spreads. They are going to be forgiving. I had 5 ways of making money on this position. We made money if SPY moved up, down, or sideways, as long as it stayed above 335. We made money from time decay adding up, and we made money from volatility decreasing. There's a lot to like about this trade. Sure, I would love to have had the big move higher this morning. Would love to have booked the bigger profit. It just didn't happen. Unfortunately, markets, obviously we're reacting to the news overnight, but to be able to book a partial profit, we'll definitely take that. So we took 2 overnight pop trades this week, both on SPY. The first one we talked about midweek. If you haven't had a chance to watch the midweek recap video, you can take a look on our YouTube page, our YouTube channel. So we talked about something very similar on SPY earlier in the week, because we had 2 trades where we were dead wrong on direction on SPY, and we still made money. They weren't huge profits, but to be dead wrong on your directional outlook and to still be able to book profits in this market, we will absolutely take that. right? So if you still have this trade on, if you're a current customer and you still have the trade on, keep in mind this trade, it expired. These options expire in another hour and 20 minutes. So I highly recommend you close it out before the end of the day. Don't mess with expiration. Crazy things happen in the last 15 minutes of the trading day. You can go from a nice profit to a loss immediately. I would recommend taking the profit, taking the small profit, free up the capital, and move on to the next trade. Speaking of those next trades, let me cover some of the markets that we're looking at going into next week. SPY, we talked about this one midweek. The system is in a long trade. We are bullish on SPY going into next week. The entry point there on that long setup was at 335.57. I would love at a minimum to get up and test 343. It's a swing level that we talked about earlier. Love to see that level tested earlier in the week, next week. And if we get any type of stimulus news out over the weekend, we could see a quick pop higher early next week. If we do get a sell-off going into the close and then early next week, what I would need for a new short setup is I would need our trend strength indicator to fall below 0. So we would need most likely a move down into the 330 to 332 range in order to get a short setup here going into next week. So we're cautiously bullish on SPY going into next week. QQQ, again, the NASDAQ is the weak name out of the bunch. We're still looking at a bullish pattern, big picture. This is the 195-minute chart. So you're not going to see, you're not going to see this chart, moving all over the place intraday. It starts to smoothen things out a little bit. And we are finding support right on top of the 50-period EMA. That's that white and yellow line. It does feel nasty today, right? NASDAQ is weak. Until we break that 50 EMA, okay, I don't think there's any serious damage that has been done as of yet. Should that level break into the end of the day, into early next week, that could certainly change things. The trend strength indicator, if it falls below 0, that would change my outlook. That would change me from bullish to bearish. But at this point, again, given how well the market has hung in there today, I am still cautiously bullish going into next week on QQQ. So bullish on the NASDAQ, even though we have seen some selling here today. The Russell, IWM. Also bullish here as well. The Russell is actually positive, up about 0.5% today. This long setup did trigger in yesterday afternoon. Our long entry point was right here, the blue plus signs. Our entry point at 152.46. That setup is there because our trend strength indicator down at the bottom went from red to blue. We are expecting a push to the upside. Our stop is down at 147.59 is the stop right there. And then on the upside, I would take a look to see if we can get up to that swing level just below 157. I would love to see that level hit early next week. If we get any type of positive news over the weekend, again, look for that level to be hit pretty quickly going into next week. Gold, GLD. Load up the chart here on GLD. Very similar story on both gold and silver. My next anticipated move on both of the metals is a move higher. Right now, we do have a long setting up. For us, it's just above the 50 EMA. Just above 180 would be a level on GLD that I would look to get bullish again. So we've seen a nice pullback on gold. I am looking for the next wave to the upside. So it's not a trade that I'm in. I'm not looking to place a trade yet. I want to see 180 broken on the upside first. So gold is definitely on my radar for early next week for a new potential setup. XLE. Take a look at energy. We've talked about this the last few videos. I mean, energy has been completely beat up. We are here today, really going back into the yesterday afternoon. We have tried to see energy stabilize a little bit. Could we be working out, a short-term bottom potentially? But you take a look previously, we've seen this pattern before a few different times. We've seen markets reverse, seen it look like it's ready to head higher, and then it's just, we break back to the downside, right? We get another wave of selling. But definitely looking for a tradable bounce going into next week on the energy names. So I don't have any any bullish trades here for today, but it is definitely one that I'm keeping a close eye on going into early next week. I would love to get some bullish exposure on energy for a trade. Again, I keep in mind, I'm not talking what's going to happen 6 months from now. I'm talking about the next week or two. Definitely would like to see a bounce higher in the energy products. The financials. We are getting closer to earnings, but I'm still trading these. The financials are actually positive on the session. Citigroup starting to perk up a little bit. Still need our trend strength indicator to go above 0. Right now, it's still slightly red, but if it breaks above the 0 line, this is also one that I'll be looking at on the bullish side early next week. JP Morgan. JP Morgan is already in a long setup from earlier in the week. We got the long setup because our trend strength indicator went positive, went above the 0 line. We triggered in long at 97.40. So we're in a small profit here at the moment. JP Morgan's actually up 1% today. Nothing huge, but definitely looking for a bullish move to the upside going into earnings. Since I'm talking about JP Morgan, let me just use this as an example here. We have to decide what expiration cycle we're going to use. I talked about this in the video earlier in the week. I am starting to look more at the November monthly options with 49 days left to expiration. I've been trading a lot of October options the last few weeks. I'm starting to get away from the Octobers, starting to look more at the November options. October with only 14 days left, it's just too aggressive. The time decay is too significant there. I would rather go farther out to November. I had that question come in earlier in the week. Why would I go out 49 days if you don't expect to hold 49 days? Well, you go out that far to limit the impact of time decay. Even if I only look to hold 5 to 10 days on my position, by going out 49 days, we're able to limit that time decay, which is nice. It's still going to be there, but we're able to limit it somewhat. So I'm not opposed to using any of these weekly cycles in here. You've got 4 different weekly cycles that have between 20 and 40 days left expiration. I'd be fine with any of those. Just be cautious there, as the weekly options don't typically have as good a liquidity. It can be more difficult to get filled on the weeklies. Now, volume has been pretty good this week, so it shouldn't be as much of an issue with the volume so good, but just something to keep in mind long term. A couple of credit spread trades that I am looking at going into next week. Beyond Meat, symbol BYND. One of those names that has had a pretty impressive move to the upside. Our pulse indicator down at the bottom has plotted green. What that means to me, price action is between a 2 and a 3 standard deviation move on the upside. It does not mean price can't move higher from here. It just means it's not statistically probable. You start to get into a 2 or 3 standard deviation move, and only 0.2% of all occurrences will fall outside of this range on the upside. Again, it's possible, it's just not probable. When you start to see a pattern like this, where you get multiple green bars in a row on the pulse indicator, we typically see either a period of consolidation out of that pattern or even a reversal in the other direction. Look what's happened the last few days since those green bars started to plot on the pulse. See how price action started to get choppy up in here? We have started to find some resistance around 170. Very, very typical pattern. So what am I looking at here for Beyond Meat? Let me go over to the trade page and I'll walk you through a setup. I'm looking to potentially sell a credit spread, and I am looking at selling a call spread. Selling a call spread is a neutral to bearish position. We would make money if Beyond Meat just stays sideways in here or even reverses back lower. Now we can either use the weeklies in here. We can use the November monthlies. With a credit spread, I don't typically go out 50 days. Okay, because with the credit spread, we want the time decay, right? The time decay is our friend if we sell a spread. So let's take a look, see if we have enough liquidity in some of these weekly options. Let's go out to the October 30 options. There's actually decent liquidity here. When I say liquidity, I'm talking about volume and open interest. I am more concerned with open interest than volume. Let's go ahead. I'm going to go ahead and take a look at the 175 calls. I'm going to go to the out of the money call options. I'm going to go to the 175 call. I'm going to right click, go to sell, and select vertical. That is going to pop up an order down at the bottom. where I'm selling the 175 call and buying the 177.5 call at the same time. This one is currently trading for 80 cents mid price. If I can get filled there at 80 cents, bring up the order confirmation box here, I'd be risking $170 to make 80, right around risk 2 to make 1. I'm okay with that ratio because we have 5 ways of making money on this trade. We make money if Beyond Meat moves up, down, or sideways, as long as it stays below 175.80. Current price is right around 165.70. We'd have a $10 cushion where I can be dead wrong on price and still make money. I also make money from time decay adding up and from volatility decreasing. So there are 5 ways of making money on the position. So that's one of the trades that I'm looking at going into next week. And you might be looking at that saying, okay, you went through all those charts and you mentioned, you're cautiously bullish on many of the index products and on the financials going into next week. That is certainly true. But when I take a look at my portfolio, I want to make sure I have exposure both ways. Even though I'm cautiously bullish next week, I don't want to load the boat with bullish positions and then have the market sell off. Now all of a sudden I'm in trouble and all of my bullish positions are underwater. I want a good mix of trades, right? Beyond Meat is a neutral to bearish position. I'm fine with that because it does complement some of the other positions that I have on in my portfolio really well. Okay, so that is one of the credit spread opportunities I'm looking at for next week. And let me go back there. What is my target zone? I like to close out of my credit spreads when I can keep between 50 and 75% of whatever I collect to put the trade on. So if I got filled at 80 cents, if I can buy the spread back for between 20 and 40 cents, that would allow me to keep between 50 and 75% of my maximum profit potential. I don't like to use stops on a credit spread personally. I like to manage these trades through position size. That's the way that I do it. If you wanted to use a stop, I will typically use a 60 to 70% stop. That's what I would recommend if you do need that black and white rule in place. All right. Another credit spread opportunity is DraftKings, symbol DKNG. Very similar chart pattern to what we just took a look at over on Beyond Meat. We are overbought. What quantifies it as overbought? The pulse indicator is green, indicating that price is between a 2 and a 3 standard deviation move. Doesn't mean it can't move higher from here. It just means it's not statistically probable. So this is another one where if you wanted to sell a call spread, trying to put on a neutral to bearish position, this is another one that's definitely sticking out to me. It doesn't mean we need a big move lower. I don't need the bottom to fall out. All I need is a period of consolidation, a sideways move, or a move lower on DraftKings, and we'd be sitting okay there. Okay, so I've already got a DraftKings position on. I'm actually looking to add another one here early next week. Definitely think this is an overbought name, and you can see it's basically doubled. We've seen this stock essentially double since early September. I mean, in the last month. I mean, it's been an impressive move. We're definitely due for a pause here. All right. Let me quickly grab a link here for you guys. So the link on the bottom of the screen, we are wrapping up our ETF Options Superstars program launch here this week. We've been bringing on a new round of traders with the ETF program. The ETF program, it utilizes a lot of the strategies that we've talked about here today. We do utilize some long calls, long puts. We utilize a lot of credit spreads. It's just been a great performer for us. We've actually had 10 trades in a row, 10 winning trades in a row here the last couple of weeks. The performance has been phenomenal. Now, we've had close to an 80% win rate over the past year and a half. The performance has been very, very good for us. If you need something to watch over the weekend, right? Now, the weather's changing for a lot of people. You might be stuck inside. Well, here's a link to a webinar that we put together. So it's netpicks.com/0920 EOS. I know it's a mouthful there. But if you go to that link, you will see a video that walks you through how our ETF service works. And we actually are including, through the weekend, we're including our overnight pop trades, the ones that I talked about earlier on SPY. it's going to be, those pop trades are going to be sold as a completely separate program going forward, but we're actually including them as a bonus at the moment for everybody that signs up for the ETF service. So if you're looking to take advantage of those trades, we've had some really great returns with that setup as well. We'd love to have you join us. So if you have any questions on the ETF program or anything that I've covered here today, as always, feel free to post a comment. You can contact me directly. My email is mike@netpicks.com. Otherwise, I am going to start to wrap up here for the week. We'll be back here early in the week next week. We'll be doing another live session. So we'd love to have you join us. Keep a close eye on our YouTube and Facebook pages, and we'll get you the details. All right. So enjoy your weekend, everybody. Thanks for taking your time, taking time out of your day here today to join us. And we will talk to you guys here early next week.